First question I have to ask you is, you are the most respected banking CEO.
Listen, no excuses, but people make mistakes. We're going to make mistakes. This obviously was far bigger than a mistake we'd want to make. And we had it came out at exactly the wrong time and exactly the wrong way, but that's what happens sometimes. Mistakes don't wait for perfect timing. So hopefully the company will learn from it, wrestle it down, improve ourselves, and continue to do what we're supposed to do, serve clients around the world.
You said that the better...
So I think it's the wrong way to say it. I think the better lesson is, it doesn't matter how much you trust. It's kind of like trust and verify. When you're playing with fire, you have belts and suspenders. She had done an exceptional job for a long period of time. But this one portfolio, the synthetic credit, it needed a different risk metrics and different controls around it. And it wasn't just my trust, just kind of the system didn't do that, and obviously we should have done that long. Ina is capable and competent. She had managed this company through multiple storms. A former chairman sent me a letter saying she saved the company sometime in the past. So I think it was earned. It wasn't, and also she was so careful in everything she did. So there was a risk committee. There were people involved. She asked for help sometimes in a bunch of different things. I mean, it doesn't matter. Like, even if you trust me, it doesn't mean if I'm doing something a little complex and sophisticated, you should say, you know what, let's run up on the disciplines we should have done around this, regardless of trust.
So on April 13th, during the conference call...
And so, I had spoken to people. They had done reports. They'd come back, and almost everyone up and down the line thought, this is temporary. It was a small thing. It was blown way out of proportion. I obviously believed it. I obviously was wrong.
When did you know?
Like just being a little breathless, but I remember telling everyone, you know what, it's going to be really tough. I mean, we've embarrassed ourselves. There are going to be investigations. We're going to have to do this right. It's going to get everyone upset. I said, you can write the press. You can do all this stuff. It's going to be really bad. We need people to put on their jerseys, figure it out, help, and we're going to get through this. We're going to wrestle it down. We're going to confess our sins. We're going to move on, and hopefully not going to take our eye off the ball, which is running the business. I mean, that's what I worry about now. It's like, we got to run a business. Every day, people are buying and selling and making loans and trading, and that's we're worried about Europe. Not really spend the time where we need to. What it was in the quarter. I think in the testimony we made today, we said that the risk has been reduced, such that it could still lose money from today forward, but it would be, the probability is less and the magnitude would be less. But let me just, here's a way to say it. We said we're going to be solidly profitable this quarter. I think I could probably, obviously, we will be solidly profitable in the third and fourth quarter, unless something else goes wrong, but it won't be because of this. We won't be solidly profitable. Our shareholders more disclosures on what the risk is and what risk remains.
At that point, will you put parameters? Again, back to some of the questions.
Model review group, which signs off, and we have lots of models. I also caution people, we don't run the business of models. VAR is one thing, specific limits and granularity, stress testing, and this is called plain common sense. How bad can things get? And also, is this helping a client, or is it just something you're doing for the house? And so the VAR model, I was copied on a memo, okay, that said there was a change in the VAR model. So that's going to come out. I was copied on a memo that said there was a change in the VAR. I paid virtually no attention to it. I didn't think it was significant at the time. And honestly, VAR is not my favorite method of looking at risk.
But the bottom
runs by models. There are models in every group. Those models have an independent review process. Independent of them. Risk is independent of them. Model review reports to the head of risk. They're independent. The thought in model changes is that it more accurately reflects what's going on. So you can actually more accurately manage your exposures. We do not believe, so far, we've found no reason to believe different, that this was done nefariously so they can take more risk. Remember, at the point, we thought they were reducing risk. So on April 13th, the thought was this wasn't as big a deal, that they were, and that it was going to be manageable, and that model, it wasn't the flaw. And when we filed the 10Q on May 10th, we said, whoops, not only do we have a major problem here, but the model itself wasn't very good when we went back to the old model.
So the old model
is in place. This probably would have happened anyway. Maybe it would have been caught a little bit earlier. And we're still looking at exactly what happened. First of all, it's appropriate we finished the review. be kind of peculiar to say we're going to make these decisions before we finished it. And obviously there are people directly involved, there's some people indirectly involved, and we'll think that through. This is going to set precedents for the company. There's a right thing to do and a wrong thing to do. We're going to do the right thing when we figure out what it is. We're not going to do the bloodthirsty thing. We're not going to do this thing that makes the press feel great. We're going to do the right thing for the company and the people, all things considered. Remember, a lot of these people have been in the company for a long time, and so we're going to be very thoughtful about this process, and it has to get board review.
Will you get back?
Board of directors, 100%, hedging, macro hedging portfolio. We think it's allowed. We think it should be allowed. Doesn't mean it's always going to work. So, I mean, there's this irrational thought that it always has to work. No, actually, things don't go the way you expect. Like I said in testimony, the far more important thing about Volcker is around market making. We have the best, widest, and deepest capital markets in the world. Market makers reduce the spreads on securities. Because the spreads are low and there's liquidity, people can buy and sell at good prices, companies can issue, and the secondary market and the primary are directly related. So all I've said is whatever we do in Volcker, let's not throw the baby out with the bathwater. And it's going to be complicated. It can be done well. It can be done badly. I think that we should stop talking about like it's binary. Are you for or against Volcker? It's not binary.
Well, let me ask you one.
Hedging thing. I believe the original intent of those trades was to hedge, and they should be allowed. And I think you could draw a bright line against what people used to call prop. If I hire you, I put you in a corner, you don't do customer business, use a balance sheet, and you just try to arbitrage. I could put a bright line behind that. What I can't put a bright line behind is when you say proprietary, so I get asked all the time, if you made or lose money on this, that just shows. That's true for every loan we make. That's true for every security you buy. So I'm saying is when you get into some of it, it's hard to say. I think the really important thing about Volcker is that when we finish the rules, we have the widest, deepest, and most transparent capital markets in the world. They are that today. If you travel around the world, you know exactly what I'm talking about. I want them tomorrow. And those capital markets are one of the engines that helped build this. That's all I'm saying. Before it was damaged, that is, I'm going to do the best I can every day. Tell the people the truth. We work hard. We admit our flaws, and we move on. I'm going to be fine. I'm not worried about it. We're doing a real review. A lot of people who are not in their current jobs are really being cooperative. I think it's smart for the company that we need that, and it's good for them. A lot of people said, I know I made mistakes, so let me be helpful in getting out of these mistakes. So, that's the right way to do it. We will take the right action at the right time.
So what's the number one?
Always, when something has risk in it, make sure there's always a second set of eyes that's rigorous and studious and disciplined, and I think we just dropped the ball on that a little bit. And then the other one, I say, activities should always have granular limits. Because once they don't, you can end up taking a lot more risk over here because it's using someone else's limit, but you didn't realize that it was different. So I'd say those two big things. Before we look at the big picture, there's a good political reason for union and good economic. Political because they had wars for centuries, and economic because they look at the market of America and say, if we can have a big open market like that. And those are still true. I think the politicians have the will. They really say, we want to fix this. We're not going to let it go down. And it's just so complicated. So what you've seen is a series of fixes, but they're mostly short term. Get through this crisis, get through that crisis. They're going to need that. They're going to have to stop, make sure banks don't have runs. They're going to make sure that sovereigns can sell debt. But they also need to fix the fundamental problem, is the underlying union, which is, the fiscal disciplines around the unions, the deficits. That also calls for common social policy, maybe common retirement plans. So it's going to be hard. There's going to be no aha moment. So I think you're going to be living through this kind of roller coaster that sometimes you're going to feel like they're doing it, sometimes they're not doing it, sometimes they're a day late and a dollar short, sometimes they come out with something like the LTRO, which is so big and bald. We all say, thank God. It bounces around for a whole bunch of different reasons. And we now have, we have someone running what we call a Euro Command Center, weekly, maybe monthly meetings. We know what we're going to do if problems start. What you really want to do is when problems start, like who's responsible for what. And that a lot of people are being told, this is your main job. If that happens, you have a new job. And it's only that job. So, just to we already have a kind of on yellow alert. This would be going to more of a red state of concern. So we're not there yet. Mm-hmm. We're just starting to track it.
Who's running this for you?
I don't want to get specific names. But you should imagine that the whole operating committee and then all the people involved in the businesses, so everyone in the investment bank, everyone in global cash management and custody, everyone in global money management, they are all part of this process to be ready in case this goes in a way that we can't predict. That's the other thing for us. I'm not predicting it, but we have to be prepared for it. Those are two different things.
Mm-hmm. Well, one last question.
all I can repeat is that we said all of our businesses are doing okay. American business still seems to be chugging along, so it's not strong, but it's not weak. You've seen some data. I didn't see the data today. I know some data came out of retail sales today. But the underlying is actually pretty good. Businesses have a lot of capital. They have earnings. Middle market companies are in better shape. Credit is back to where it was in like 2006. Middle market loans are growing. Small businesses seem to have better credit. Housing is getting a little bit better. I mean, it's kind of on the bottom and maybe reversing. Consumer debt service ratios are back to where they were 20 years ago. The consumer's still spending money, but what we really need is jobs. Jobs will drive everything else, including the housing recovery, businesses becoming more confident. I think to get jobs, confidence, certainty, fiscal policy, all those things that, can create that secret sauce of confidence and for both consumers and for business.
Okay.
Well, yes,
Not here, but we'll be
I'm not
seeing
coming
you on
back here.
Capitol Hill.
Okay.
That's right.